So I just finished an interview with a business owner in India, and my mind is still trying to wrap my head around it. It was, I don't know, it was insightful. For one, it was different from a lot of the other insight that I've gotten, which was, well, for one of the reasons is because it's the first time I've interviewed someone in India as part of this project, but I really had some insight from him because what he does is he helps investors. Sorry, there's some construction going on right here. All right, so he helps investors invest. You know, like he's in India, so they're mostly Indian investors and they invest in the Indian stock market. But for those that want to invest abroad, they're seeking other opportunities, they still invest heavily in the United States stock market. And so from an investment standpoint, you have to look at what's going on with the printing of dollars and, because we're printing trillions of dollars. You have to separate your view as an investor from as a consumer. So from a consumer standpoint, inflation is not really a great thing, right? Because your wages aren't going to go up to keep up with inflation most of the time. So therefore, every time your employer pays you, you're going to be able to buy less stuff with that. It wouldn't be a problem if your salary went up with inflation, because then it's just like, well, you might be paying more, you might be spending more money, but you're also making more money, and so it just kind of cancels each other out. But for most consumers in the United States, that's not how it works, right? Your salary, maybe you get like a 1% or 2% bump if you're lucky every year, right? Well, inflation's more than that, okay? And it will likely increase based on the number of dollars that are being printed and being circulated. Actually, not even being circulated. They're being printed and given out, but they're really not being circulated. So they're just kind of sitting on the sidelines. That's one part of the problem, right? So from a consumer standpoint, that inflation and what is actually happening and what will continue to happen is not so much a good thing. But from an investor, it's not really a bad thing. Or like, as long as inflation is not hyperinflation that causes a lot of instability, right? Because if you think about the cost of a loaf of bread, let's say today the cost of a loaf of bread is like $5, and a year from now it's $10. That's alarming, right? From a consumer standpoint, it's like a huge amount of inflation going on. But every time that company sells a loaf of bread, you can think of like, it gets that amount of wealth, it gets that amount of value. So the share price, in theory, of that company should also go up from, let's say, $5 a share to $10 a share, all things being equal. So if you were an investor and you just put your money in that company, inflation's not really a bad thing, because the value of the company goes up because the goods that they're selling all go up. Now, I know this is like a generalization, right? Because if there's a business that gets hurt by inflation, like consumers buy less of a thing because of inflation, therefore the value of the business goes down, then, that's not very good. But as an aggregate, inflation just like keeps the value of assets moving up. So anyway, we spent a long time talking about that, and my mind was blown. Another thing too is that, I've hopped on here and shared some videos about how American companies, there's a lot of them that are vulnerable because if the relationship between the US and China continues to be strained, they might lose access to their manufacturers, right? There's a lot of US companies that, they're just a US brand. I'm thinking of like drop shippers or FBA. Like, they're just a name that's registered in the US, but all that product comes from China. And it's a really popular model. You might know some people who are drop shippers or, sell stuff on Amazon, and they play that game. And they're vulnerable. because if there's some kind of disruption that disrupts, like whatever, trade war, hot war, whatever it is, or just disagreement and people can't play nice, well then that's their whole business. It dries up. They can't get product from China. So some insight from this firm in India was that in anticipation of that, recently there's been some movements where Chinese, people are moving, they're finding manufacturers in other countries like India, Bangladesh, Indonesia, Taiwan, Thailand, and so that's really interesting. I think that represents a unique opportunity for American businesses and individuals to invest and find an opportunity is in that massive transfer of manufacturing. Now, currently, like, China's main competitive advantage is manufacturing. Like, hands down, they've just built a system where they've got the skills and they've got the scale to manufacture. I mean, we just have to acknowledge that and recognize that, and kudos to them. I mean, that's fantastic. It because of their advantage, it does make many American businesses vulnerable, and so in response to that vulnerability, there is a movement happening. People finding and transferring manufacturing out of China and into some other countries. It's the same reason why, like, even people reviving manufacturing in the United States is a fantastic movement, as long as you can do it in a way that actually competes on an efficiency standpoint. Well, that's a marvelous idea. Anyway, so I'm just, I loved it, and there's a lot to unpack there. I took a lot of notes, watched for a couple videos, because I could feel that interview just blew my mind. I can't even synthesize it just in this quick video. So watch for some more videos to drop on some insights from an investing firm out of India.